Tēnā koutou, tēnā koutou, tēnā koutou katoa. I am very pleased to speak with you this morning and share a couple of thoughts on behalf of many people inside Z Energy who have something to say about sustainable energy futures. And in the interest of time, I'll begin my address while the computer's getting sorted out. First of all, I'd like to start off by saying it's very rare that the words sustainability and fossil fuels are used in the same sentence with any positive intent. That may be so, but at Z we reckon we can stand for something different. We think although we are a fossil fuels company right now, we can make a significant and perhaps even unique contribution to a sustainable energy future. We do that by generating a new paradigm. So today I'd like to share with you what's shaping our thinking about that new paradigm. I'd like to talk a little bit about what we're doing right now, and frankly, I'd like to ask for your help. Our company benefits from a 99-year history under the previous ownership of Shell. However, now as Z and owned by New Zealanders, we have the opportunity to move beyond the big oil paradigm. So what do I mean by that? So as a company, Z does not produce oil or gas, so we don't have any vested interest in protecting the billions of dollars we have invested in an upstream business. We're here to provide transport fuels to Kiwi consumers and to Kiwi businesses. But we're actually ambivalent about what we sell. I don't mind whether what we sell as a transport fuel is oil, gas, electrons, or a biofuel. And thirdly, our stakeholders expect much more from a local company. A company that's owned by New Zealanders and operating only in New Zealand, and with the brand promise when we say Z is for New Zealand, that is much more than just a statement about our shareholding. So here are two thoughts that may surprise you about Z and sustainability. Firstly, Z wants to be in the middle of the solution. We no longer want to be seen as being in the middle of the problem. For far too long now, the big companies in this local market have actually been slow or indeed a barrier towards progress in alternative transport fuels. And secondly, financial success for Z does not have to come from selling more. Now, I realise that's a strange thing for a company to say, so let me talk a little bit more about that. Because you have to understand, as the chief executive of a company, I'm clearly very focused on generating financial returns for the risks that my shareholders are taking. But selling less does not mean that we can't be financially successful. It just means that unit margins will need to increase to compensate us for the lower volumes. So currently, and this is public domain knowledge, Z's post-tax profits are about 3 cents a litre. So when all's said and done, the bottom line is 3 cents a litre. So we're a high fixed cost, low margin business. So a 20% reduction in our volumes would only need to be offset by a 3% increase in our selling price. So I'll say that again. Imagine what's possible in a paradigm where if you sold 20% less, all you would need to do would be to increase your price by 3%. That's major savings for our customers, and a 20% reduction would be a significant contribution to the environmental quality here in New Zealand. And this is all still within the context of being an economically sustainable business. So with these two thoughts in mind, Z went on what I would call a listening spree. We conducted one of the single biggest pieces of research ever conducted in New Zealand over the past decade. We talked to a heck of a lot of people. We asked them what they don't like and don't like, what they want and don't want, about our service stations, our brands, our customer offers, about how we conduct ourselves as an industry, how we interact with the community, and clearly what they thought about sustainability. At the end of all that, we'd had feedback from 17,000 New Zealanders. Now that is actually the equivalent of stopping everybody in Ashburton, sitting them down for a few hours and listening to whatever they have to say. Beyond that research, I also spent time with local thought leaders. For example, I hosted a number of gatherings with people who would not normally want to be associated with myself or a company like the company I represent. In some cases, actually, it was quite hard work to get them to join me. In all cases, I wrote them a personal letter talking about what I stood for, what our company stood for, and tried to create the opportunity over dinner for a common dialogue, to explore what we could actually be doing together. While that was happening, we also spent time getting clear on the values of the people who work inside Z Energy. Now, I have quite a lot of experience about leading teams, and my experience tells me that you cannot ask your people to execute a strategy that is misaligned with their values. Or put another way, you cannot ask them to do anything that is misaligned with what really matters to them. So as much as we listened to the outside world, it was also equally important we understood what mattered to people inside Z. After all of that listening, internally and externally, when it comes to sustainability, it's pretty obvious that Z should do something. We need to be responsible and we need to be accountable. So we've published our long-term goals around sustainability. We've set targets for 2015, and we report in progress each year in our annual review. And we create a dialogue around all of that through forums like this, with the expressed purpose of expanding our networks, deepening our relationships, and getting to connect with people where it may not always seem that natural. Now, sustainability is a very odd thing for a company like us to be talking about, but it's something that Kiwis are actually looking for leadership on. At Z, sustainability means acting in a way that benefits the future of the neighbourhoods that we operate in, the planet that carries us all, while at the same time preserving the economic future of our company. We believe we actually have a unique set of circumstances that provide us with the opportunity to make a difference and to demonstrate leadership towards a more sustainable future on a scale that very, very few companies in New Zealand have. This slide states the fundamentals for what we believe around sustainability, our truisms, if you like. These are the things that guide us, bound us, and inspire us to do something. If Z does not commit to sustainability and do something about it, then the long-term future of Z is seriously in question. Or in other words, we will simply not exist in the long term. Now, we sell products that contribute up to 90% of New Zealand businesses' carbon footprint. And it's estimated we contribute up to 25% of an individual's carbon footprint. So here's another way of looking at that. Let's pretend that carbon emissions are the equivalent of a seat in a plane, say an Air New Zealand Airbus jet that flies between Wellington and Auckland. So the carbon emissions from our operations is the equivalent of seat 1A. And our operations are what our people do in our offices, it's the travel that we undertake, and it's all of our service station activity. Then we think about our outsourced supply chain, and that would be the equivalent of seat 1B. This is the ships we charter to bring oil and products to New Zealand, the ships we use to move product around the country, and all the trucks that eventually drive that product all the way to customers, whether they be service stations or commercial customers. And that's seat 1B. If you then looked at the carbon emissions that come from our share of the production at the Whangarei refinery, that's equivalent to the first 4 rows in one of those Airbus jets. Then when you actually come to look at all of the carbon emissions from the products that we sell, that would take another 2.5 jets worth of seats. All right, so let's remind ourselves. We're in seat 1A, our supply chain is in seat 1B, the first 4 rows are our refinery production, and we have another 2.5 jets to carry the emissions from all of our products. So it's pretty clear where we need to be putting our attention. And clearly there's a massive opportunity. So these are Z's 4 sustainability pillars. We've already publicly stated our goals, as I said, and we measure our progress. And most importantly, we want people to hold us accountable for what we say. So firstly, we say we will use less and waste less. Ensuring that our own operations are efficient, in other words, tidying up our own backyard, is a contribution in its own right. And we're doing what's expected here. We're replacing the lighting in our service stations with LED lighting. We're actually replacing all of the car wash units we have with water recycling units. We're actually changing the way we take packaging into our stores to reduce the amount of waste so that when we sell something in a store, we minimise the waste coming in. Those are all the obvious things. What perhaps is less obvious is that all of the salespeople who work for Z Energy drive a hybrid car. Now, we've actually progressively been swapping out the fleet, and we're halfway through that, and we'll complete the rest of that in about the next 12 months as those leases gradually expire. 2 other things we want to get after. We want to reduce our carbon intensity on behalf of our customers, and we want to help them use less of our products. We believe that climate change is real, and the products we sell contribute towards accelerating climate change. While no one person or organisation can actually fix this problem, Z is uniquely placed to make a difference and to demonstrate real leadership. And we need to do this by working with other organisations, by investing in new technologies and helping our customers reduce their own fuel consumption. Sort of weird for a company to be saying that. And we also want to do business in a way that actually supports New Zealand. We believe that being owned by New Zealanders and operating in New Zealand brings with it some special responsibilities. Part of the way we feel this responsibility means we will go out of our way to support New Zealand businesses and to invest in New Zealand. We will purchase from within our shores and will support both local businesses and, equally importantly, the local neighbourhoods that we operate in. Now, in a world of triple bottom line reporting, sustainability has three dimensions. Each of these is turning on their own, but they're very much like gears in that they are all interconnected. Meaningful, long-lasting change will only happen through the combination or gearing of those three areas, not by any one of those cogs spinning or turning independently on its own. So clearly there continues to be even further evidence in recent years about the link between climate change and carbon emissions. And globally, society has been responding to that change. In some cases too slow for some, in some cases too quick for others. But that change is still driven, in my view, just by a small group on a global scale, a small group of core people. And I would say that they haven't really catalysed the change that is needed. The biggest change, which unfortunately has been quite adverse to the cause, is the global financial crisis. So post-2008, we are now living in a world where investors have limited appetite for financial risk. There's less funds available for investment, and we have a crude oil price that has ranged between $90 to $120 a barrel for the past 3 years. Now, these drivers of change away from fossil fuels, or the drive for change away from fossil fuels to lower carbon alternatives, has been affected by each of these gears, and in ways beyond what I've just spoken about clearly. However, in my view, I believe the momentum and the impetus towards change since 2008, or that was there in 2008, has been greatly diminished. And it's diminished to the point that I think the pressures for change aren't as strong. Now, the most critical driver to move away from fossil fuels to lower carbon alternatives, frankly, is price. Back in 2008, some people were predicting that crude oil would go to as high as $200 a barrel. In actual fact, in July of that year, we were at $147 a barrel. And that was on the back of rapidly growing demand in the emerging markets, matched with limited supplies. However, since that time, we have seen supplies of non-conventional oil, in some respects, explode. We talk about the shale gas and oil in the US, we could talk about tar sands in Canada, and then we also get into the ultra-deep water drilling that's taking place off the west coast of Africa and in the Gulf of Mexico. Fossil fuel subsidies continue in emerging markets or growing developing countries like Malaysia, India, Indonesia, China, and most of the Gulf states. This means that the impact of high prices, whether it's at the level of today or what we may be forecasting for the future, is not really having that much of an influence on the purchasing decisions or the consumption decisions of people in those markets. And those markets are actually driving the demand for increased levels of oil production. In a recent BBC Hard Talk interview, the chief economist of the International Energy Agency, Dr. Fatih Birol, said, and I quote, "Fuel subsidies are the #1 enemy of climate change. 90% of fuel subsidies in these markets go to what would be described as the middle and upper classes in those markets." He further goes on to say, and again I quote, "Carbon taxes are necessary to change behaviour as oil, gas and coal markets do not give and will not give sufficient price signals." And in the past 2 years, the controversial practice of fracking has clearly gained a great deal of momentum. And it's actually changed the production profile of oil and gas in the US, with implications for geologies in other parts of the world. And as John talked about earlier, the UK being a very good example of that. This has got to the point now where some people refer to the US no longer as the US, they simply call it Saudi America. So still the world's largest consumer of oil, Saudi America is moving away from being the largest importer. So here's some data. Their domestic crude production in December 2012 was the highest since March 1993. And imports were down by 50% to their lowest level since 2006. Now, we all know about Texas as an oil-producing state. At the end of 2011, Texas as a state was producing about 1 million barrels per day. At the end of 2012, just 1 year later, they were producing 2 million barrels of oil a day. Now, there is consensus, and it's consensus, not agreement, that the production costs of this controversial practice of fracking puts the cost of production between something like $45 to $60 a barrel. In actual fact, there's some people who predict it may go as low as $25 a barrel in the next 5 years. This compares to other non-conventional oil production costs at around $80 to $90 a barrel. This week, natural gas prices in the US are actually less than the equivalent of $25 a barrel of oil. Now that's 75% down from the peak in 2005. So you can imagine what that actually does to how people think about things. Now these prices are forecasted, the gas prices are forecasted to remain low for many, many years, leading to speculation that the US could actually start to repatriate energy-intensive industries like steel and glass back to the US from China. Equally, the US has actually invested billions of dollars over the last 10 years in LNG import terminals. And these may now be at risk, as clearly the demand for imports has fundamentally gone away. To the point now that in some cases there's additional investment being made in the import terminals to turn them into export terminals. So the US is projected to actually overtake Saudi Arabia as the largest producer of oil, the largest single country producer of oil by 2017, and to turn into a net exporter by 2020. Now this has the potential to be one of the most profound and fundamental shifts in oil markets since nationalisation of the countries in the Middle East in the early 1970s. Now, prior to the global financial crisis in 2008, there was a steadily growing investment into alternative or lower carbon fuels. Oil creeping up to and then eventually going beyond $100 a barrel was seen as a good thing, because this provided confidence around the prevailing view that if we had an oil at a particular level, it provided a floor to the downside risk of these investments. Well, interestingly enough, that floor of $100 oil is still with us today. But the Great Recession has actually changed the approach post-2008 to investment. We now have limited funds being used to pay down debt. The pipeline of future funding is strangled. And in that Hard Talk interview I spoke of earlier, Dr. Burrell said that the global investment in renewables declined in 2012, which was the first time for over a decade. It's not a particularly happy circumstance. There's also been some notable changes in the governmental and regulatory space. The tragic tsunami in Japan has caused a fundamental rethink of nuclear. And that actually came at a time where there were many projects, either new projects or relifing projects, that were up for approval. Kyoto 2 has failed to materialise, and some governments, and we have one of those, has actually decided to operate outside of that agreement. Carbon prices have collapsed. When New Zealand's emissions trading scheme was put in place a number of years ago, it was founded on the assumption of carbon being priced at about $25 a tonne. Now, this was a critical assumption for people who were making investments in lower carbon technologies or alternatives. Today, carbon emitters can actually meet their obligation to the New Zealand government for as little as 20 cents a tonne. That's 0.1% of the original carbon price assumption. Now, the US is a quarter of the world's GDP, and as such is a fundamental source of innovation and venture capital. Yet messages from the US are mixed. Very recently, the federal government put into place laws that said that new vehicles that come to market must reduce fuel consumption from 9 litres per 100 k's to 6 litres per 100 k's, the same standard that actually Europe's operating at today. And at the same time the federal government sent that message, 2 US states introduced taxes on electric vehicles. The past decade in New Zealand is equally mixed. In its latter years, the previous Labour government put in place a mandate that required a percentage of fuels sold in the transport sector to be alternative fuels or non-fossil fuels. Shortly after being elected, the national government came in, they repealed that piece of legislation, and they put in place an incentive for biodiesel. Although after 3 years, that incentive has actually gone away, and with it, clearly has had an adverse impact on what was an emerging biodiesel industry. Now, I don't want to debate the politics of all of that. There are plenty of other people better qualified than myself to deal with that. But I don't know of any country outside of Brazil that actually has developed and operated a biofuels industry at any scale that makes a difference without having incentives or mandates. And that's simply because businesses don't like uncertainty, and they struggle to take risks and innovate in those sorts of circumstances. So at a time when the drivers of change are much less supportive than they were back in 2008, and therefore why is there a pressure to move away from fossil fuels, how does Z work within this new paradigm that we're talking about. Now at Z, we're going to take some, and indeed we are taking some practical steps. As I speak right now, we're actually completing the front-end engineering design on a tallow to biodiesel plant. This has the potential to actually produce 20 million litres of B100 per annum, and will actually take inedible oil, inedible animal fats that would otherwise be exported and turned into candles and soap. Harnessing the waste stream from the agriculture industry would enable us to sell B5 biodiesel across most of our service stations in the North Island and supply many of our commercial customers who, like us, have a commitment to a lower carbon future. At a modest cost and actually quite a modest time frame, we could actually expand production of that plant to 40 million litres per annum. Now that's first generation biofuels. What about second generation? Where the science is less proven and, as I think most people in this room would agree, much more diverse. These conversion technologies are very much in early stages, so we're almost into the debate around is this VHS or beta that's going to win over time. So we asked ourselves, what does Z have and what don't we have in this space? We've made a strategic decision to actually focus on a second generation project where another party has key capabilities that we don't have, and we believe we have key capabilities that they don't have. So we've partnered with Norske Skog to develop a pilot plant that would use second generation technology to process wood waste from the forestry sector. This waste is the stuff that's left after you cut down the trees and once you mill them in the production plant. Now we believe we can convert this, with the technology getting right, we can convert this stuff that's left over, the waste, into a form of synthetic crude oil that could be processed at the refinery in Whangarei. Right now we're working on a government funding application along with Norske Skog for what we sort of call our sawdust to crude oil plant based in Kawerau. We call this our stump to pump strategy. Now there is actually enough sawdust and forestry residues in New Zealand to generate about 10% of our crude oil requirements. And that crude will actually be what I would describe as a green feedstock rather than a fossil-based feedstock. Now, in addition to the win that comes from that, there's a number of other benefits that are very, very substantial. In doing this, we would actually cause a step change to New Zealand's forestry sector by adding value to 1.6 million tonnes of underutilised wood residue. The total economic benefit could be as high as $450 million per annum by 2030. And that includes the balance of payments deficits, as well as creating employment and therefore benefiting and delivering towards better social outcomes in some pretty tough parts of New Zealand where levels of high unemployment right now are causing social problems. We'll also have enhanced our renewable energy beyond the electricity sector, where we actually have a proud record, but we can go beyond that sector. We can do that by actually saying that if we take that crude oil and we turn it into transport fuels, we could actually impact 10% of the transport fuels consumed in New Zealand. If you go back to the aircraft analogy I talked about before, that extra 2.5 planes, we might be able to chop that down by 10%. And we could actually reduce the transport greenhouse gas emissions in New Zealand by 1.5 million tonnes of CO2 equivalent, as well as lowering the carbon footprint for forestry and New Zealand manufactured goods. There's equally the potential for the development of a green chemicals industry and the opportunity for much more substantiation of New Zealand's international green branding. Now, offsetting these substantial but into the future benefits are some real challenges. And we do need to be upfront about that. Right now, there is no government mandate or incentive for biodiesel. These tough economic times means there is not a sizable consumer pull towards environmentally friendly products, whether that be transport fuels or even something as simple as household cleansers. And we also know from experience that in these tough economic times, people will not pay a premium for an environmentally friendly product. So even with crude at $100 a barrel, the economics are particularly marginal, even for first-generation biodiesel. For our tallow project, we've actually looked at all of the assumptions, we've modelled the whole thing, and we've conducted a thorough review, and we've expressed that through what's called a Monte Carlo analysis, where you look at all of the variables. Now, the model tells us we have a 42% chance of losing money. 42% chance of losing money. Now, my commercial mind thinks more than twice about that. I have to be honest about that one. But actually, there are a range of other issues for a company like us to consider. Our brand positioning, first mover advantage, and clearly potential changes in the regulatory space. Now, there's clearly more on the go here than just the merits of these two projects. Z is sending a clear message to everybody in New Zealand, everyone who's in this space, to innovators, scientists, technology people, venture capital, customers and community groups. When it comes to alternative fuels, we are open for business, even when that threatens the products we currently sell. Now, we don't have all of the answers in this space, and we will not be able to make the difference we are committed to by working on our own. As much as we say we're open for business on alternative fuels, we're equally open to ideas, innovations, technologies, proposals, challenges and questions. Everything and anything that moves us towards an alternative energy future. While we're talking about what else may happen to alternative fuels, we're equally taking some practical steps around our current fossil fuel portfolio. These are practical steps that we're actually taking with our customers. Now, through a combination of in-vehicle technology, the web, our own expertise, and human factors psychology, we're able to reduce the fossil fuels consumption by our customers, our commercial customers, businesses in New Zealand, by at least 3 to 5%. Now, we have a couple of pilots underway at present, and we're learning a heck of a lot from those pilots. Now, in some cases, we've gone to our customers, and in order to get them to play the game with us, we've guaranteed a reduction. We have said, look, work with us on this. Pay us a few cents a litre more. We will commit to a consumption reduction and a cost saving for you. And if we don't meet that commitment, we'll pay you the difference. Now, again, there's a benefit here beyond just the environment. By changing driver behaviour, we actually think will also contribute to greater social outcomes like improved road safety. Now, I realise that what I've said today may not make sense coming from what is currently a fossil fuel company. Z may not have credibility in this space. Perhaps Z should be much more focused on making money rather than trying to worry about the future. Particularly when you think about our shareholders. When one of our shareholders is the New Zealand Superannuation Fund, who clearly has an interest in the future pensions of all New Zealanders. Maybe now is not the right time for us to be taking risks, whether they be strategic, operational, financial, even to do with the launch of a new brand. Now, we are going to get some things wrong, but we're strong and diverse enough to take these sorts of risks. As I said earlier, that's one of the benefits of having the scale that we have within New Zealand. All said and done, is it also bad if we get it wrong? And there is, in fact, no link between carbon emissions and fossil fuels. Now, what I've spoken about today matters. It matters to me, it matters to my colleagues, it matters to Z, and it matters to all of New Zealand. So I'd like to leave you with 4 simple thoughts. Firstly, our New Zealand ownership requires us to be in the middle, to embed ourselves in the middle of the solution and no longer be in the middle of the problem. Secondly, we are absolutely determined to make a difference in this matter. Please hold us accountable for everything we say that we will do. And lastly, and as importantly as the others, please contribute to both our thinking and our doing. And for now, that's enough said about Z.